Hello everyone, you're all welcome to this week's market breakdown. So today we will be analyzing the market, doing our top-down analysis and looking for opportunities for the week. So before we start our analysis, I want us to do a quick recap on market structure to have an idea on how the market moves. So the market moves in three directions. So it's either the market is trending up or the market is trending down or the market is ranging. So basically, we have the uptrend, the downtrend, and the ranging market. So let me use this tool to show you how the uptrend looks like. So in the uptrending market, we have the low and the high here. And we have a lower high, sorry, a higher low and higher high, higher low, higher high, higher low, and higher high. So basically, when the market is trending up, we'll get series of higher lows, higher high, higher lows, higher high, higher lows, higher high. So to connect our trend lines, we'll connect our trend lines on the lows. So there's one low, the second low, third, fourth. So this is how the uptrend looks like. So let me write down. So this is an uptrend. Let's put this here. All right, so this is an uptrend. And the downtrend is just the opposite of this. So we have a high here, a low, a high, and this. So on the downtrend, we connect our trend line on the highs. So there's the first touch, second, third, and fourth touch. Right. So there's the uptrend and there's a downtrend. So the last one is the ranging market. So in the ranging market, we use the rectangle to connect the highs and the lows. So there's the support and there's a resistance. So if you're trading ranging market, you use support and resistance. While if you're trading trending market, you use trend line. So let's write this down. All right. So there's a uptrend, the downtrend, and the ranging market. So basically, this is how the Forex market moves. Is either the market is trending up, or the market is trending down, or the market is ranging. So if the market is trending up, we look for buys. If the market is trending down, we look for sells. And if the market is ranging, the best practice is to stay out of the market. But if you want to risk on it, you can buy at the low and sell at the top. But trading a raging market is a very risky, is a risky type of trading. So the best practice is to wait for the breakouts of the support or the resistance and enter your position at the retest of the level. So this is our cash swing when the market is ranging. So if the market is trending up, after seeing our first touch, second touch, we wait for the third touch. The third touch is our entry point if we're trading the trend line strategy. So there's the first touch, the second touch, and there's the third touch, which is our entry point. And our target is usually the next high. That's our TP. So I don't want us to waste much time on this market structure. I just want us to have an understanding on how the market moves and we'll get straight into the business of the day, which is the top-down analysis and market breakdown. So let me delete all this and get straight into the charts. All right. So on my watch list, I have GBP NZD, Euro NZD, gold, US 30, GBP CHF, BTC USD, and USD card on my watch list for the week. So I'll start my analysis with the GBP NZD. So I'll start my analysis from the daily time frame. So those GBP NZD on the daily time frame. So the main reason why we start analysis from the daily time frame is to get the bigger picture of the market, to know the overall move of the market. You don't just buy a book and start reading the book from the middle. You have to start from the beginning so you know what the book is all about. So starting your analysis from the daily time frame print a story on how the market is moving, where the market is coming from, and the the potential level the market is supposed to hit before any reversal or retracement. So on GBP NZD, we can obviously see the market trending to the upside. So there's a low and there's a high. So let me use this tool to make it easier. So we have this swing low, swing high, swing low, swing high, and there's a swing low here. So what are we anticipating? We're anticipating another swing high to break this high over here. So the first thing we do is to connect our trend line, but before then, let's delete this markup to make our charts clean. So let's connect our trend lines on the lows. So there's the first low, there's the second, okay, there's the second low, there's the third, the third low. And as you can see, after the third touch, that was when the market shot up, moving up to, let's see, more than 1,000 pips. So that's the power of the third touch of the trend line. The third touch is usually our entry point, and that's how you can cash swings if you're trading trend line. So those GP NZD on the daily time frame. So let's go down to the 4-hour time frame to see what's happening on GBP NZD. So on the 4-hour time frame, let's focus on the current market structure. So on the 4-hour time frame, you can see GBP NZD. You can see GBP NZD has broken this trend line here. So on the 4-hour time frame, you can see the market was trending down, and at this point, we got a breakout at this point, and we can also draw a support level over here. Yeah, so let's make it more clearer. So as you can see, GBP NZD has broken this trend line and retested this support level. And for those that knows about chart pattern, you know this is a reversal pattern. You can see the head. There's a head. There's our left shoulder. And there's our right shoulder. So this is a reversal pattern. This is a very clear head and shoulder pattern. So GP NZD is actually valid for buys. So what are we anticipating on GP NZD? So we're anticipating the market to retrace, to give us a pullback back to this support level. And if we get our candlestick pattern at the support level, we'll go for longs, and our target should be this high over here. So our first take profits should be this high, and our second take profits is this high. So if you want to hold the swing, you can hold to the last high over there. So this is my analysis on GBP NZD. So all you have to do is just to patiently wait for the market to retrace back to the supports. And if we get our candlestick pattern at the support level, we'll take our entry, and our target will be this high over here. This will be our take profit 1, take profit 2, and take profit 3. So it's a very straightforward analysis. We've got our head and shoulder pattern, which indicates a reversal in the market. And all we have to wait for is just to wait for the market to retrace back to the support level, giving us our candlestick pattern, and we'll take the market to the upside. So this is my analysis on GBP NZD. So next on my watch list is Euro NZD. So I will delete everything. So start the analysis afresh. So we always start our analysis from the daily time frame, like I said earlier, to get the big picture of the market, to see the market, where the market is coming from, and the potential level the market is supposed to hit before any reversal. So on Euro NZD, you can see Euro NZD is extremely bullish if you want to connect the trend line. There's a low here. First touch. This is another low. Second touch. And if we extend the trend line, you can see this is the third touch of the trend line. You can see the market move aggressively to the upside. So on Euro NZD, if we go down to the 4-hour time frame and connect our trend lines, this is the first this is the first touch of the trend line. Second touch. All right. So this is the first touch, second touch, third touch. You can see that there's a fourth touch, and the market broke, giving us a retest at this point. And as you can see, there's a very strong engulfing candle here indicating the continuation to the upside. So let's see how we can join those move to the upside. So on Euro USD, we have to go down to the 1-hour time frame to see how we can get an entry point on this trade. So on the 1-hour time frame, there's there's this low here and also this low here. So what we have to do, we just have to connect these two lows and wait for the third touch of this trend line to get our entry point on Euro NZD. So this is a similar setup to the GBP NZD setup. So for this one, we just have to wait for the markets to pull back to this trend line. And if the trend line is being respected, and we get our candlestick pattern on this trend line, we take our trade, and this should be our targets for this trade. So because of this week, we are going to target this high over here. And this will be our take profit one, our take profit two, and our final take profit will be this high. So on Euro NZD, we just have to wait for the markets to come back to the trend line. And if we get our one or our candlestick pattern on the trend line, we execute our trade, and this will be our take profit one, take profit two, and take profit three. Like I always say, guys, trading is 90% waiting and 10% execution. So you have to wait for the markets to come to us. You don't have to force trade. You have to wait for the market to come to us. You don't have to force trade. It's better to wait for a trade than for you to jump into a trade. Most people can just enter with this candlestick pattern, but entering with this candlestick pattern is not really a wise. It's not a good way of trading because you'll be risking more, and your reward won't be too big. So it's better for you to wait for the market to come to you. So you risk the main thing is for us to get a proper setup that will allow us to risk small, and our reward will be bigger than our risk. So the best thing for us to do is to wait for the market to come back to the trend line. And if we get our candlestick pattern on this trend line, we execute our trade and target to the next high. So this is my analysis on Euro NZD. A straightforward analysis similar to the GBP NZD analysis. So next on my list is USD CAD. So I'll just delete everything and start the analysis afresh. We'll start from the daily time frame. All right, so a quick one. The time frame as trend line traders, the time frame you should focus on should be the daily time frame, the 4 hour time frame, and the 1 hour time frame. So basically, the daily time frame is for you to get the bigger picture of the market, to know the overall move of the market, where the market is coming from and where the market is going to. And the 4 hour time frame is for you to get the trend of the market, to know what the market is currently doing. And the 1 hour time frame, we use 1 hour time frame for our entry. So on USD card, you can see USD card is playing between this, let's say there is a resistance here, and let's connect the lows. Yeah, all right. So you can see USD card is playing between this trend line and this resistance level. And currently the market is respecting this trend line. It's sitting on this trend line, and if we zoom, you can see the market has already given us a candlestick pattern, a reversal candlestick pattern, a tweezer bottom, which indicates a reversal. And as you can see, there's a lot of bullish momentum in the market. You can see the strong bullish candle here, which indicates the buy move to the upside. So USD card is valid for buys now. So let's go down to the 4 hour time frame to see how we can join the move to the upside. So on the 4 hour time frame on USD card, the first thing we do, connect our trend line. So there's a 4 hour trend line. So if you're drawing your trend line, you can cut through the wick of the trend line, but never cut through the body of a trend line, of the candle. You can cut through the wick of the candle, but never the body of the candle. So this USD card, you see the first touch, second touch, and the third touch wasn't respected. The trend line was broken. And we got the retest over here, giving us this pin bar, followed by a very strong engulfing candle, which indicates the buy move to the upside. So this is the confirmation candle on this trade, but we can't risk all this. Let me see how many pips. Oh, just 126 pips. We can't risk 126 pips for just one trade. So we have to look for a way to cut down our risks. So this candle, for those that know about smart money, there's a lot of inefficiency in this candle. So though we are not trading smart money, but the market has to come back here and pick some orders before going to the upside. So I won't go deep into the smart money stuff and the rest, but what we can do here is just to draw a fib on this candle. All right. So we are expecting the market to move to the 50%, of this candle before any reversal to the upside. And as you can see, On that level, there's a support here that was broken and became resistance. And right now it has been broken and we're expecting the market to come back to this support, give us our candlestick pattern, and our target should be this high over here. So on USD card, we just watch the market to see how it reacts, how USD card reacts to this support level over here. So it's either we get our entry from this support level over here, or the market moves back to the trend line and give us a candlestick pattern to get our entry to the upside. So those are the two scenarios we'll be looking at on USD card. So it's either the market respects this level, or the market comes back to the trend line and give us our confirmation to the upside. And our target should be this should be our first target taken, and our final target should be this high over here. So this is my analysis on USD card, a very straightforward analysis. We've got the breakout of this trend line, and we've got a retest at this point. So what are we waiting for? We are waiting for the market to pull back to fill this candle to continue the move to the upside, or the market should move back to the trend line to give us our candlestick pattern, and we'll take the buy to the upside. So next on my list is GBP CHF. So this will be the last currency pair I'll look at before entering indices and gold. So I'll just delete everything and start afresh. We'll start analysis from the daily time frame. So on GBP CHF, we focus on current market structure. You can see GBP CHF is actually bearish. There's a high, a low, high, low, high. So what are we anticipating? Another low. So this is how the markets move. There's no need to complicate things. Just trade what you see, not what you think. Just make the chart easy for yourself. Don't complicate things. There's no need drawing too much line, knowing too much technologies and the rest. Just simple trend line, no touch of trend line, no entry. That's my number one rule. So just focus on making it easy for yourself. Don't complicate things. So on GPCHF, what can we see here? There's the market is respecting this resistance over here. So you can see support. It was broken, now it became resistance. Currently, the market is moving to the downside. So let's go down to the 4-hour time frame to see how we can join the move to the downside. So on the 4-hour time frame, you can see the market respected this resistance level and it's moving to the downside. So what can we see? Yes, so we'll go down to the 1-hour time frame to see if we can get any clear trend. So on the 1-hour time frame, you can see the market respecting this trend line. There's the first touch, second touch, third, fourth. So we've got multiple touches on this trend line. So what are we anticipating? We're anticipating a retracement back to this trend line. And if the market touches this trend line and gives us our candlestick pattern, we take sales and our target should be this low over here. So this is my analysis on GBP-CHF. We'll go back to the 4-hour time frame. You can see the market respecting this resistance level. So, like I said, we use the 4-hour to know the trend and 1 hour for entries. So, we go down to the 1-hour time frame. You can see a 1-hour trend line. You can see the market is respecting this 1-hour trend line. So, what are we waiting for? We're just waiting for a retracement back to this trend line and get our candlestick pattern to continue with the sell move to the downside. And our take profit will be this low over here. So let me just put this here. So it's all about the waiting game. Like I always say, guys, we wait for the market to come to us. We don't chase trade. We trade what to see, not what to think. So trading is 90% waiting. So it's all about the waiting game. So we have to wait for the market to retrace back to the trend line, give us our candlestick pattern, and take the sales to the downside. So next on my list is gold. So start our analysis from the daily time frame. Gold has been trending for a very long time, so we should be looking for buys on gold. So on gold, what can you see on gold? You can see there's a low here. Let's connect this low. First touch, second touch. So we are waiting for the third touch of this trend line. But as you can see, current market price is very far from this trend line. So we have to focus on what's happening currently, not predict what will happen later. So we have to focus on what's happening now. So we can trade what we see, not what we think. So we have to delete this trend line and focus on current market structure. So currently, this is what is happening on gold. So let's connect our trend lines. So there's the first touch, there's the second touch, and then third touch. So if we go down to the 4-hour time frame, I believe it will be clearer there. All right, so I think it's much better on the 4-hour time frame. So on the 4-hour time frame, you can see the first touch of the trend line, and we'll go the second touch here, and this is the third touch of the trend line, and that's why the market moves to the upside aggressively. So we've got multiple touches on this trend line. So this is the second, third, and fourth. All right, so let's focus on what's happening on gold currently. So if we look at the current market structure, you can see gold respecting this level of support over here. You can see resistance, 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 and it was broken. It became support, support. So what are we anticipating? We're anticipating the market to move to this support and continue the move to the upside. We can also connect this resistance because it seems gold is respecting this resistance too. So currently gold is, for those that trade gold regularly, gold moves in zones. So Gold is actually consolidating in this zone over here. So what we'll simply wait for is just for the market to move back to this support level. And if we get our confirmation, we'll take buys to the upside. So gold is a very straightforward analysis. We just have to wait for the market to move down to the support. And if we get our candlestick pattern on the support, we'll enter buy then and target the resistance. Since the market is moving between this support and this resistance, so our target should be this resistance. But my overall, since gold is bullish, I'm anticipating a breakout of this resistance level and the retest at this point to continue to the upside. But like I said, we don't predict the markets. We react to the market based on our analysis. So if we catch the buy here, we sit at this point and watch what the market will do at this resistance level. If we get a breakout, we'll wait for the retest and we'll continue with the move to the upside. So this is my analysis on gold. A very straightforward analysis. We just have to wait for the market to move back to the support. And if we get our candlestick pattern, we execute our trade and target this resistance over here. So next on my list is BTC USD. So start from the daily time frame to get the bigger picture of the market. So let me delete everything and start afresh. So on BTC USD, you can see the market has been moving to the upside. There's a low here, high, low, high. So what are we anticipating? Another low to take out this high and create a new high. So let's delete this and connect our trend line. So on BTC USD, we can connect our trend line on this low, our first touch, second, third. So we've got multiple touches on this trend line. So there's the first touch, second touch, third touch, fourth touch, and we're currently waiting for the fifth touch of the trend line. So let's focus on what the market is doing currently to see if we can join the move to the downside. So on BTC USD, you can see some structure forming here. So this is how you trade what you see. You look at the recent price action, what the market is doing currently. And if you look at BTC USD, you can see this is the current market structure on BTC USD. So this is what BTC USD is doing currently. So let's see how we can join this move to the downside. So we have to go down to the 1 hour time frame to see if we can connect any trend line on the 1 hour time frame. So I think it's more clearer on the 1 hour time frame. So on the 1 hour time frame, you can see there's a high here, and this high. So a very nice trend line on the 1 hour time frame. So there's the first touch, second touch, third touch, and you see the market shot to the downside. So what are we anticipating? We're anticipating the fourth touch of this trend line to continue the move to the downside. And remember, the overall move of the market is bullish. So what we're currently doing is trading the counter trend to the trend line, because we don't have to wait for the market to move down to this trend line before we look for trade opportunity on BTC because you don't know when the market will come down. So the best thing is to follow what the market is doing currently. That's what I mean by we trade what we see, not what we think. So what we are seeing currently now is this downtrend, this 1 hour downtrend on BTC USD. So all we have to do is to wait for the market to retrace back to this 1 hour trend line. And if we get our candlestick pattern on this trend line, we execute our trade, and our targets would be this daily trend line, this daily bullish trend line over here. So this is my analysis on BTC USD, a very straightforward analysis. We've got the first touch, second touch, third touch, fourth touch. So we are waiting for the fifth touch of the trend line to continue the move to the downside. So the last pair on my list is US 30 for those that trade indices. So I will delete everything and start the analysis afresh. So on US 30, you can see the market has been moving to the upside. There's a low here, low, high, low. So this whole move is one swing. So high. So what are we anticipating? Another low to take out this high here to form a new high. So this is what US 30 is currently doing. So let's connect our trend line on the lows. So we have the first touch. Sorry. We have the first touch, second touch, and then third touch. So what are we anticipating? Anticipating the fourth touch of this trend line to continue the swing to the upside. So this is how you cash swing on indices. You just have to draw your trend line on the daily time frame and wait for the market to come down to the daily time frame trend line. So if you want to cash like this swing, this last swing here, if you want to catch a swing like this, you don't take your entry from the 4 hour or the 1 hour time frame. You have to wait for the daily time frame to close on this trend line. Since it's a daily time frame, you have to wait for the daily time frame candlestick pattern to close above the trend line before looking for a trade opportunity. But if it were to be a 4 hour time frame, then you have to wait for the 4 hour time frame. If it's a 1 hour trend line, you have to wait for the 1 hour candlestick pattern to close. So that's just the basic thing about trend line. If you're waiting to cash a daily trend line, and if you want to cash swing, it's advisable to draw your trend line on the daily time frame. That's how you can cash swing and you can hold the trade for weeks or months. Okay, so if you're waiting for the daily time frame swing, you have to wait for the daily time frame candlestick pattern to close above the trend line. That gives you the confirmation that the trend line will be the trend line is respected, and it makes that trend line valid to take the move to the upside. So let's focus on what we are doing now. So on the current market structure, you can see current market price is extremely far from this trend line. So I like to keep my charts clean. So I will delete this trend line for now and focus on current market structure. So go down to the 4 hour time frame to see the trend of the market on the 4 hour time frame. So on the 4 hour time frame, we can see this obvious low here, and So let's just do it this way. There's a low here, high. This whole move is one swing. High, low, there's a low. So can this one is more of a equal high. So we should look for the high that broke the previous high. That's when we get the new higher high. So this one is not we're not going to consider this as a higher high because it didn't break this previous high. So there's a high that broke the previous high. So there's a high we should consider. So this is a high, low, and currently we're having a some kind of double top. Okay, it broke, yeah, it broke the high, so there's a high too. So we're anticipating the market to give us another low to break this high over here. So let me just delete this thing and use our trend line. So to connect our trend line, we just have to look for the lowest low. To connect our trend line on this low. First touch, second touch, and then third touch. So you can see the third touch of the trend line. We got a candlestick pattern here, and you can see the market moves aggressively to the upside, giving us 2000 pips plus. So basically on US 30, we should be waiting for the market to move back to this trend line. And if the trend line is being respected, we'll take buys to the upside. So this is what we should be watching on US 30. But let's see what's happening on the 1 hour time frame if we can join the move to the downside. So on the 1 hour time frame, we can also connect our trend line on the 1 hour time frame. So there's a high here, there's another high, and there's another high. Okay, so connect this high, second touch, and then the third touch. So US 30 is actually valid for sales, but we missed the entry because this is supposed to be our entry candle. There's engulfing candle here. So this is our first touch. This is our first touch, our second touch, and the third touch, which is our entry point. And you can see at the third touch, we got this engulfing candle tick pattern. And like I showed you guys on Euro NZD, whenever you get a very massive move to the downside with just one candle, there's a high possibility that the market will have to go back and fill that inefficiency before continuing to the downside. So on US 30, the market is currently bearish on the 1 hour time frame, though the overall move of the market is bullish. But on the 1 hour time frame, the market is bearish. So, like I say, we trade what we see, not what we think. So what we are seeing currently on US 30 is a bearish trend on the 1 hour time frame. That means we should be looking for sales on US 30. So what we're waiting for is to wait for the market to move back to this 1 hour trend line. And if we get our candlestick pattern on this trend line, we'll take sales and target this H4 trend line, this H4 bullish trend line over here. So this will be our exit point because the overall move of the market is bullish. So if you're trading counter trend, we have to look for possible reversal points to exit before the market reverse against us. So on US 30, We just have to wait for the market to move to the trend line, give us our candlestick pattern, and we continue with the sell to the downside. Like I always say, trading is 90% waiting, 10% execution. You don't force trade, you wait for the market to come to you. You trade what you see, not what you think, and always have this in mind. No touch of trend line, no entry. No touch of trend line, no entry. Let me just write it down. Number one rule, no touch of trend line, no touch of trend line, no entry. So if you're trading, always have this at the back of your mind. Like there's no touch of trend line, no entry. So the reason why I focus on this rule is because with trend line, you have a better if you wait for the market to touch the trend line and get your candlestick pattern, you get a better risk to reward, and you have a defined place to set your stop loss. Unlike jumping into a trade with support and resistance where you don't have a specific low or high to set your stop loss. So if you're trading trend line, you know if the market breaks the trend line, there's a high possibility that the trend is about to reverse. But if you respect the trend line, you know the market is actually going to continue to the downside. So when you get the candlestick pattern like this trade here, if we were to set our stop loss will be on this low over here because we waited for the market to respect the trend line before entering. So we have a defined level we can set our stop loss, unlike jumping into a trade without waiting for the market to touch the trend line. So this is the pair I'll be watching for the week. So as the market moves, and so if we get more opportunities when the market open, the watch list will be updated. So I'll take a screenshot of all the analysis and send to the Telegram channel so you guys can monitor the trades as well. So this is what we'll be looking for this week. So if you've not subscribed to the YouTube channel, do well to subscribe to our YouTube channel. Make sure you like and share this video for more content. So see you on the next video.